What are ETFs, exchange-traded funds? Exchange-traded funds, ETFs, are one of the fastest-growing segments of the mutual fund industry. The reason for this is simple. Exchange-traded funds are designed to take the guesswork out of investing. They are easy to understand, low-cost, no-load funds that provide on a daily basis a real-time snapshot of what the entire market is doing. What makes exchange-traded funds different than other types of mutual funds is that they are traded like stocks every day in the New York Stock Exchange, NYSE, and other exchanges. The first ETFs were launched in 1990 by a small group of investors led by Niels P. Andreasen of Norfund. Since then, the popularity of exchange-traded funds has grown dramatically. An exchange-traded fund is different from a mutual fund in two important ways. First, an ETF is always invested 100% in the securities tracked by the fund. A mutual fund, on the other hand, will usually invest in a wide variety of stocks, bonds, commodities, etc. In fact, there are over 2,000 different ETFs available for purchase on U.S. exchanges. These funds were categorized into 27 different subsectors by the Financial Industry Regulatory Authority, FINRA. Globally there are approximately 8,000 different ETFs. The three main types of ETFs are stock ETFs, index fund ETFs, sector index ETFs. Other types of ETFs are multi-cap. These funds track the price movement of several different stocks rather than just one. This provides a little more diversification, although still not complete, because it eliminates the impact of any one company that may be performing poorly. International. These are similar to multi-cap funds, but they track the prices of stocks from different countries. Like multi-cap funds, international funds add transaction costs, but these costs are usually lower than with multi-stock funds. International funds are especially useful for those investors who have a large percentage of their portfolio invested in foreign markets. Dividend ETFs. A dividend ETF, or dividend proxy, is an exchange-traded fund that represents all the stocks in a certain industry that have a high dividend yield. Dividend yields are the dividends divided by the stock prices. Volatility ETFs. Volatility exchange-traded funds attempt to capitalize on the ups and downs of the market by investing in stocks that are considered to be volatile. How to pick the right exchange-traded fund for your needs. We've learned what an exchange-traded fund, ETF, is, how they work and the different types of ETFs. But now it's time to learn how to actually select the right one for your needs. It is best to make an intelligent decision about which type of fund is best for your situation. Remember, no matter which category of fund you select, you must also carefully consider whether or not that particular fund is a good fit for your investment goals and risk profile.